What's going on? Strat Soldier here for the weekend shift. I got a guest for you. This is pre-recorded. So when you see this, you're gonna be like, hey, these charts are off. Why are these charts? That's not what happened. That's not what happened. I know. Okay. So it's pre-recorded. So because I want to get you guys these interviews and ahead of time so that you guys it's prepared, it's organized, all that good stuff. So anyway, I brought you charts with trading ORB. All right. And then I brought you Zeus trades, trading futures with the equilibrium break. And now I'm bringing you WeeklyStockChar. He's John. You've seen him on Twitter. He's on, every Saturday. I've been following him since the beginning of all this, and he's very consistent, pretty good at what he does. But before we get him on here, let's look at what's going on SPY right now, just real quick. And if you are new to the strat, this is what we do. All right. So I trade with all 4 time frames up just like this. All right. And this shows me time frame continuity. Okay. And right now, like when you guys watch this show, it could be different or it could be even worse. But right now, it is inside on the month. All right. SPY inside on the month. We know this is a consolidation period. So doesn't mean you can't trade it because the range is so big, you can trade this. All right. But it also means we don't have, the buyers are not more aggressive and the sellers are not more aggressive. It's just a mess right now, inside bar. On the week, it is 2-2 reversal back down on the week. This week, this is September 2nd when this recording was done. And we are stuck in this right here, this level of reclaim back here. So we didn't hit the highs. We're coming back down. Now, the question is, are we going to continue to extend this thing all the way back down to 531, or are we going to get trapped in here? All right. You will know by the time this airs what happened. All right. We're just looking at what is going on right now in this moment. On the daily chart, you can see consolidation trading sideways after all this beautiful upside, trading sideways and then moving to the downside. All right. In technical analysis, this is what they really want. They want to see that uptrend, the top, and then that downside. All right. So this is like you want to talk about Dow theory, like this is perfect right now. All right. So the question is it going to continue? And if for us stratters, the question is it going to continue, through this broadening formation and take out all these things? Now, if it does, woo, that's pretty tough. All right. Remember, cash is a position. You don't need to be trading all this all the time. There's a lot of people out here that will try to if you don't trade both sides, you ain't no good trader. If you don't do this and that, you're not any good. I tell you right now, if you're better at trading common shares and you are better at just sitting in a holding pattern and sitting in cash and waiting until the time when the buyers actually step back in, wait. All right. I'd rather you wait the entire September because we did talk about seasonality. I talked about I talked about August, September, and October being all red for the last 3 years. All right. Go watch those old weekend shift episodes. August was green. All right. So everybody's like, oh, Strat Soldier don't know what he's talking about. All right. When we opened up, did we go inside and did this hammer go in force on the month yet? Not yet. All right. So we're still waiting on that. All right. Again, when this episode airs, this will probably be at 6:03 for no reason. It'll be at 6:03 for no reason, and whatever. But Dow Jones doing the same thing. All the broader averages is about doing the same. All right, and then QQQ doing the same. All right, QQQ, they hate you. All right, hammer not in force. This was a little better situation because there's magnitude here. All right, from 486 to 503. There's some more meat on them bones, as Rob would say. But right here, not doing the best. All right, not doing the best. That hammer on the week did not go in force, and it's not even close to going any kind of outside week or nothing like that. So this is continuing to the lows. We'll see what they want to do here. That's SPY, that's Dow, that's QQQ. I'm not going to go through the sectors again because it's probably going to be different by the time you see this. It's going to be different. So be careful out there. Oh, where'd my shoulder go? There, it's back. Be careful out there. Again, cash is a position. I say take a break. All right, take a break. You could paper trade this. All right, just don't get on the internet talking about you made all this money and it's actually a paper trade. Don't do that. That's bad. But I say paper trade this stuff. Maybe try a prop firm. or maybe just hang out and do nothing. All right, because it's low volume and all the people at Wall Street are on vacations because they're real people too. So, and the volume will come back after in October. All right, we'll see. So that does it for where we're at in the market right now. And so let's get the weekly start chart. All right, let's learn some new stuff and get some more tools in our tool belt. Hey John, if you can hear me, go ahead and unmute.
I can hear you, Jermaine.
Hey, how you doing? You sound great.
Pretty good.
Uh,
Thanks for
so,
having me.
no, thank you for coming on. Seriously, I really do appreciate it. Always trying to teach something or have the people learn something new because sometimes it gets a little boring with the ones, twos, and threes, and sometimes, you know, uh, you tell people something and then they hear it in another voice and then they go, ah, that makes sense. You're like, I told you that 2 weeks ago, and they're like, nah, when John said it, it made sense.
I got you.
So thanks for being here. Go ahead. How'd you start trading and how long you been doing this?
Boy, I started trading probably 20 years ago.
Hmm.
Um, and at the time, charting wasn't very good. Right now, I think is kind of the golden age. So many resources now, um, almost real time, uh, zero commissions. It's a great time to be a trader.
Yeah, yeah, I agree. Yeah, the zero commissions was very interesting. Yeah, I came in when that was a thing, when they cut the commissions, and then it's getting even a little bit more weird. I think they're talking about making the futures 24 hours. I don't know. You think they'll actually do it?
I don't know. I don't trade futures. So I don't know. I don't know. I don't have a comment there. I got to stay in my lane.
There you go. There you go. I hear you. I hear you. So what do you? I know you trade the Strat, but what do you trade and how you trade?
I mostly trade stocks, sometimes ETFs or 3x ETFs. And then for like longer term holds, I use mutual funds.
Oh,
And
okay.
that's kind of a weird thing in today's age, but just like mentally, I compartmentalize mutual funds as something that I don't trade. I just hold, buy and hold.
Okay. Yeah, yeah, very cool. Yeah, we haven't had anybody on the show that does that yet. So yeah, yeah, that's cool. Well, if you're ready, let's get into it. 20 years, you know what you're doing. A lot of people they started trading during COVID time, and a lot of people, even myself, I started in 2019. So, but I mean, COVID happened right after that. You know what I mean? So I don't consider myself
Yeah.
a COVID trader, but but whatever. It's about that time, about that era. And
Everybody's always learning, no matter where you are.
that's it. That's it. That's the point I'm trying to make. So let's see what you got.
All right, let me share my screen. Hopefully, this works.
Oh, I'm in the matrix. I'm in the matrix. There you go.
You're in the matrix.
I see like six of me up on the screen all at once. Oh,
All right, how about now?
it looks awesome. It looks awesome.
Oh, all right. I'm gonna I'm gonna start kind of high level. This might be a little bit basic for some people, but I think it's important, and a lot of times it gets kind of glazed over. So, in whatever market you're in, there's generally two kinds of market participants: investors and traders. And it doesn't matter, stocks, bonds, real estate, art, stamps. It's kind of this division here. So the investor class, longer term focus, usually expressed with buy and hold. So right now I'm thinking about Warren Buffett, somebody like that. But even him, on some level, I see he's selling out of Bank of America, Apple. There's a little bit of trader in him, but generally his holding periods are pretty long. On this side, there's traders, and they generally have a shorter term focus, and that's manifested in day, swing, and position trades. All right. So, um, what's interesting is that my wife and I probably have 3/4 of our funds on this side and maybe 1/4 on this side.
Okay.
And, I gravitate towards being a trader. And so some people might look at those numbers and think that's kind of odd. But usually I'm trading for a goal, and that could be a house or maybe a car. This is going to be my poor drawing skills coming out. but this is the car I decided I wanted, and so the money's going out this way, and it could even go over this way. But on the investor side, I'm always holding and I never sell. So just sort of through attrition, it tends to grow in one direction. The other interesting thing, at least I think it's kind of interesting, is I probably spend 1% of my time on that side and 99% on this side of the ledger. And so I would just say to your listeners out there, if you don't have the time or the inclination to learn about trading, or the time to put into it, I would just stay on this side. And I might be being generous here. It might be more like 99.9% of my time on this side and 0.1% on that side. And if I just drew a quick little back of the envelope graph here, my activity level on the investor side, it looks like this. There's long periods where nothing's happening. And this might be 5 years where I'm not really doing anything. Whereas trading, I'm trading pretty much every day. Sometimes I'll take a little break, but mostly I'm trading every day something.
Mhm.
Just to give a little bit more detail, what I'm doing here is investing in mutual funds, and that's kind of odd for a trader. I used to trade mutual funds way back when, until I got a nasty letter in the mail saying that I wasn't allowed to anymore. And it wasn't because I was losing money, but I had to kind of compartmentalize those mutual funds as something that I couldn't trade. And so what I do is I let the capital gains or dividends or other kinds of distributions go into a sweep account. All the major funds have a sweep account or some short-term bond fund or government bond fund. And then I let that money accumulate, and then I wait till something terrible happens, and the headlines are always going to be awful, and the stock chart's going to look like that, and it could be COVID, or it could be recession, or it could be a real estate crash, and then I buy in a few tranches, and then I hold. So there's really not a lot of activity on the investor side for me, versus the trading side, and just a high level view of what that looks like for me.
I like that. I like this is I don't think we've ever had anybody break it down like that. Um that I'm you got my attention. I've never had anybody actually say, okay, because people talk about that on Twitter. You know what I mean? Well, I'm in a losing position. I guess I'm an investor now. You know what I mean? Like you're actually like, hey, no, this is what this really is about. And I like how you talked about the activity too. Is there I definitely don't want to interrupt you, but when those
No, please
periods
do. If you have questions, jump in.
yeah, if there's those periods of nothing happening, you know what I mean? What do how do you get that mental like, hey, this is, I mean, you're doing it now. You're explaining the mental side of it, but is it hard to watch that? You know what I mean? If it was up, let's just say a couple $1,000, and then you know what I mean, and then it goes down, but is there a lot of, does that trader side in you go, wait a minute, we should do something with this?
I've had to kind of train myself away from that. It was a struggle for me at the beginning to kind of compartmentalize mutual funds as something that I don't trade
Hmm.
anymore.
Hmm.
But now I've been doing it for so long that it's just kind of second nature for me. And I really don't, the swings and the balances can be large, um, but it doesn't really impact me. Um,
Okay.
another, another thing that I'm always trading. So like I'm not really doing nothing. I'm just doing nothing on the investor side. And so mentally that part's not hard at all. The other thing I look for is I try to buy on because on mutual funds you get end of day closing prices. So really what I'm trying to do is look for like a minus 1,000 or more Dow point day towards the
Hmm.
end of like a longer downtrend. I'm looking for to buy capitulation is basically what I'm doing. And you'll see things like CNBC will be having the markets in turmoil thing will be flashing, and there'll be margin calls, there'll be stuff like that. There'll be news articles about the market going to zero and all that stuff. And that's when I know I have to be more active, even if I don't, even if the news is really bad, like the COVID lows. The news wasn't great, um, but I knew I had to be doing something.
Okay. Very good. I like that. And that also defines better the because everybody likes to use that whole that Warren Buffett quote, buy when there's blood in the streets, like blah, that this actually makes it make sense. Yeah, this what you're showing makes that quote make sense.
Yeah, thank you. Hopefully, it resonates with some of your listeners.
Oh yeah, definitely. I'm sure it will.
All right, so this investor class and the traders will have different goals, and I just wanted to talk a little bit about that on the next slide. So for traders, your goal might be to eliminate a particular mistake you keep making, or just to trade cleanly, something along those lines. Uh, for somebody with a longer term time horizon, it might be something like saving for college, for your kids, or maybe retirement. Um, so I did a little research, and if you just write down those goals, whatever they are, doesn't matter. Even if you don't put a lot of effort into the goals other than writing them down, somebody studied this, and there's a 42% improvement in the likelihood that you'll achieve your goals. And to me, that's just free money. So if you apply, goals to trading and you're trying to make money, or trying to trade more cleanly, it's really a disservice to yourself if you don't write down goals, because just by writing them down, they're more likely to come to fruition. And in general, either if you're a trader or an investor, there's 3 steps that I've found help you in achieving the goals. So the first step is gathering data. And for a trader, it'd probably be trading logs and trying to highlight where you're losing money, or some other problem you're trying to fix. It could be graphs or tables. Um, and and you're trying to, from that data, identify and frame whatever problem it is that you're trying to fix, and then you implement a fix or potential solutions. You won't always know exactly the right direction to go in, but you have to try something, and if it doesn't work, you just go back and kind of start again and go through this loop until you see some improvement. And I don't want to get too into the weeds here, but for a retirement example, you're dealing with inflation that just eats away at your savings over time. Um, I made a little chart of the U.S. dollar in gold terms. It's not exactly inverse because I have this fudge factor there to make the numbers a little bit easier. But basically, this chart is saying that the value of the U.S. dollar in gold terms keeps decreasing as prices keep increasing. And then if you look at something like healthcare costs, the US healthcare costs, this is an older slide, but the US healthcare costs are going up in kind of a parabolic way, versus even an expensive country like Switzerland. It's more linear. So these costs, the differential over time, gets wider. And so to me, if you're thinking about retirement, what this means, I got to erase all this stuff, is that 3, 4, 5% in like a money market fund or a bank CD or short-term bonds, it's not going to get you there. It's not going to get you to your goals because of this and because of that and because of this. So to me, this means, you have to be in more aggressive assets. And if I'm going to trade bonds, I'm going to do it with 3x ETFs. I'm gonna invest in maybe riskier stocks, because I need to get into that 7 to 10% or more range in order to defeat this and this and this. So that's what I mean by setting goals, and they're going to be different for traders and investors, but it's the same kind of format. Write down your goals and then you follow the steps.
That's awesome. I like that a lot. This is awesome. If you turned on the weekend shift and you thought we was just going to go through another tiny little method that you You're wrong. We're learning everything right now. We're learning it all. This is good. I like this. I start every webinar, Strat Camp webinar with we don't even talk about the strat in the beginning. We talk about mindset, and we talk about writing down goals, and I make everybody write down what their trading goal is. So I love that this is in here because it lines up. It lines up, and we're not talking about no hocus pocus like a manifestation, nothing like that. We're talking about like here's a goal, here's a plan, if we're hitting bumps in the road, how are we going to fix it? And we have a method. That's awesome. I love this a lot, John. This is great.
All right, thanks a lot. I'm going to keep going here. So this is getting into a little bit in the details of how I trade. And in general, I go from higher time frames to lower time frames. And I like to start with the big picture, and then kind of frame different stocks or sectors or industry groups. And it's almost similar to framing the problem with goals. And I do that by looking at indexes and seasonality. We'll talk more about that in a second, at least the way I view it. And
Mhm.
monthly view, obviously, I look at uh, end of month, but it's good all the time. But usually I have a greater focus at the end of the month, say end of July, end of August. Um, that's just me. And then a weekly view, usually I'm looking at this later in the week. So, and just a little tip: if you start running scans or database queries at 4 p.m. on Friday, you're going to get different results on a lot of platforms than 8 p.m. And that's because the databases haven't finished populating. So,
Oh,
so I will always wait till if it's a really wild and crazy Friday night, I wait till 8 p.m. or Saturday morning to run my scans and look through charts because you'll get slightly different results, especially for thinner names. Just a
I
little
did
tip
not know
there.
that. That's very interesting. I have to look at that now. Now you got my yeah, definitely I got to check that out now because
Yeah, if you
I'll run a
if you run a
scan.
scan that comes back with say 500 names, which is
Hmm.
it's a big scan. If
Hmm.
you run it at 4 o'clock, you might get 495. And then if
Okay.
you run it at 8 o'clock or the next morning, you might get 505 hits. So
Mm.
it's not a huge difference. And if it's a small scan, you won't see it. But it's that kind of difference. And it's not every platform um, every every week, but especially if you get kind of like a violent close up or down, you'll see it more prevalent.
Okay. Yeah, definitely check that out. Yeah, because I know that data, yeah, like you said, they're still, they're closing positions, people doing things, and also aftermarket stuff too. So yeah, I definitely want to check that out just for myself. That's interesting. That's
Yeah,
interesting.
you'd think in 2024 all this stuff would be instant, but it's not.
Yeah.
All right, on the daily view, I'm looking to see if the trend is up, down, or sideways. Is there volume coming in, and who is in control? So does the chart look parabolic? This phase is great, but a lot of times these parabolic moves kind of crash in the end. Personally, I like these stair step type moves where the stock kind of refreshes and moves higher. Or is it just kind of random noise, like I don't know what, like some kind of
Yeah.
EKG or something? And this is no bueno. I like to just avoid those.
Love it. Yes, the trading sideways. I thought you were going to draw the other way down, because people like to talk about, things going up, and then, I like to talk about the stocks falling down the stairs, like, and I'll post a gif of, some cartoon character falling down the stairs. Just blam, 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 blam. You can't,
Yeah,
you,
yeah. I mean, you see it every day. Dollar Tree, Dollar General.
oh
Yeah,
yeah,
it works both
yeah,
ways.
yep. Dollar Tree went to $1.50 tree, and that made everybody mad.
All right, and then once I'm done with the daily, I go to intraday setups. The 4 hour time frame is a time frame a lot of people kind of skip over, but it can be gold for especially for stocks that trade with a lot of volume. They have good volume and extended hours, or indexes that trade 24 hours. It can be golden. Not so great for the thinner names. Um, things like that. The
Okay,
30
I've seen.
minute for me is kind of a compromise between the 60 minute and the 60 minute, depending on which charting platform you're on. If you're looking at just regular trading hours, some charting platforms will take that 30 minute, that first 30 minute, and count it as an hour. And others will take the last 30 minutes and count it as an hour.
Yeah.
And
Hmm.
that skews the data, not a lot, but it skews the data and it skews the chart. And the skew is even worse if you're going from platform to platform. And and I can't stand that. And so I just look at the 30 minute and I try to slow things down a little bit. The 5 minute is where I spend most of my time. Um, but sometimes if the volatility kicks up, or or even if it's the opposite, that we're in a period of really low volatility and so the stocks are kind of just choppy, I'll bump up to the 10 minute. But right now, and most of the time, I'm on the 5 minute. I'm looking at price and volume, and I'll also have alerts firing off. Some I'll set on these intraday time frames, and some I'll set on higher time frames. But I won't just take those alerts blindly. I'm going to look. I'm going to look at the context and the big picture. I'm going to look at the daily view and how the trend is doing. Is there volume coming in? All this stuff before I actually try to find an entry. And if they don't meet my criteria, sometimes I'll just delete the ticker. There's no point in looking at it if it doesn't meet my criteria. So that's kind of how I go about things from higher time frame to lower time frame.
Very
Make
good. I
sense?
like it. Very good. Makes sense. Makes sense.
All right. All right. We'll keep moving on here. I touched on seasonality. We're going to talk about that just a little bit more. There's different ways of looking at seasonality. This is just one that I picked. And what you're looking at is a composite view of the S&P 500 all election years since 1950, and 2024 happens to be another election year. And it's a simple looking chart, but you can learn a lot from charts like this. And I'll try to walk through it. So it's a rough roadmap. It's not going to match exactly. What I kind of took away from this is that dips are going to be bought into Labor Day, and that's pretty much what happened. Our year looked sort of like this so far, um, and then the S&P stopped a little shy of the high. The RSP actually made new highs, and so did the European indexes. But just broad brush strokes, the dips are bought into Labor Day. Okay. Uh, Also, this is every fourth year since 1950, but um, in general, the stock market returns. This composite is indexed to 100, and in general, you get 7, 8, 9, 10% out of stocks per year on average if you're just buying and holding the index. And to me, that means one thing for an investor part of me, but also as a trader, I'm primarily going to set myself up for these long moves. And because I know that, over time, the long side tends to be the winning side. And I can short these periods, these down periods, but I just want to be aware that I'm sort of fighting against the tide a little bit. Um, Sort of related to that is that there's a time to press and a time to ease up, sort of like what you were talking about at the beginning. And we happen to be right past Labor Day now. I put a little red dot there. And this for me is a time to ease up. I've seen this a couple times myself trading through presidential elections. And we'll talk just a little bit about this if it's all right.
Yeah.
Um, there tends to be sort of this max pessimism around Halloween. And these dots aren't cast in stone. There's some error bars there, but generally speaking, max pessimism around Halloween. And there's all kinds of other data happening all this time. There's Fed speak, there's GDP, there's non-farm payrolls, there's earnings, et cetera. But the different thing this year is the election. That's really the only different thing.
Mm-hmm.
Um, and so what people do is they kind of look at the polls, they decide, all right, maybe I've got some energy stocks, and I think Trump's going to be good for energy stocks, but if he's too good for them, the price of oil is going to go down, and that's bad for energy stocks. So there's all this, kind of gamesmanship about who's good for what sector. Both candidates, maybe they hate the healthcare sector until they're sick, and then they love it. But you get these either people outright selling sectors or hedging with SPX puts or VIX calls or some other kind of hedge, and you get this max pessimism around Halloween. So for me, this is kind of a time where I want to be raising cash up in here and preparing for a low, some kind of low around Halloween. And this is a different event than some other events that catch the markets by surprise because everybody knows the election day is November 5th.
Mm-hmm.
And for most election days, there's a run up into election day and then almost an equal move higher after. And that's regardless of which candidate wins, which party, which party you like better than the other, it doesn't matter. There's almost an equal move into the election as after the election. And so that's people taking off their hedges, there's people reloading positions, there's traders like me that are piling on. And then you get this kind of euphoric top and you retrace about 38, 50%. Again, these numbers aren't exact, almost into election day, sometimes even into election day, right? So you get this euphoria, max pessimism, and then kind of I don't know what you call it, like a rebalance, re-equilibrium, and then this stair step higher into the end of the year.
Okay. Yeah, yeah. And
Yeah.
I'm while you're doing this, I'm looking at SPY charts, and yeah, and that goes right back to what I said in the beginning. You're 100%. I love that we're on the same page here. It's that July, it's that August, September, October that are red, and then November you see just shoot up. So people at home, go look at your charts. Go look at those SPY monthly charts. It lines up pretty well. Look at 2021. 22 and then 23. This is, I like this. Keep going.
All right. So that's seasonality in a nutshell. So I want to really be, I want to be raising cash here into this chop. I want to have a good amount of cash for Halloween, plus or minus a few days. And sometimes I remember when Trump was elected, the market was down, I don't know, minus 600 points in the early morning and finished green. So
Wow.
sometimes on the election day, even in the morning, early morning, um, not everyone can trade that early, but if you can, sometimes there's some good action. And then you can you can treat these dips, and it probably doesn't match exactly year to year, but you can treat these dips as dips to buy, or maybe you're a breakout trader, or maybe you want to short the kind of euphoric bounces, whatever it is that you like to do. I kind of consider this a rough roadmap for the period from Halloween into the end of the year. And don't be surprised if we get a real run into the last few days.
Very cool. I like this a lot. Yeah, that's awesome. I go through seasonality using Trend Spider, but they're more bar charts. They're more like, green, or because it's measuring the change, red, if it's zero positive change, it'll just be flat.
Yeah,
I like this line chart though. It definitely shows what we should be expecting as opposed to the Trend Spider um seasonality chart. Like I said, it's just bars. I'm pretty sure I can change it. I don't know. Right now, that's what we're looking at. So I
yeah,
like
I've
this a
I've
lot.
seen the kind of charts that you're talking about, and in some
Hmm.
stocks there's a strong seasonality component. Like they do
Hmm.
really well in July for some reason.
Yep. Yep. Yep.
Yeah.
This is
All
good.
right,
Thank
moving
you.
on.
Thank you. Mhm.
Very welcome. All right, so
Now,
we're
these are
gonna
the charts. This is why I wanted you on. This is what I see every Saturday morning. I'm like, okay, I got my show. Okay, here's the weekend shift. I gotta, and then I see charts like this, and it's full of knowledge and all this stuff. And I'm like, I need more jokes.
uh, yeah, so this has the strat nomenclature. I switched it up a little bit. I have my own kind of twist on it where I separate the two up and two down into different letters there that just kind of makes more sense to me instead of the 1, 2, 3. I don't know, maybe I'm a little slow that way, but I just switched it to letters. But basically, it's all the strat nomenclature that all your viewers will be familiar with. Um, and this is a gold chart. So I just wanted to go through the monthly chart because I think this is another thing that people skip over quite a bit. And there can be a lot of, really solid information from a monthly chart, even if you're a shorter term trader, which really I am. I'm mostly a shorter term trader. So we'll call this the A leg here. We got a strong move off the lows into some kind of resistance. All right.
Mm-hmm.
And this is the C leg, which makes this the B leg. So this is what Rob would call a measured move.
Yep.
Pretty basic stuff. So where I think it's most interesting is you get into the resistance zone and you're rejected. And you're rejected again. And you're kind of forming these equal lows here. And to me, this is a box. And you don't know when you're going to get out of that box. But at some point, it's either going to break up or break down, right? And we haven't seen this part of the chart yet. So price keeps going along and we bust out the lows. Some people might call that buy side lows. It doesn't really matter what you call it. But we had this big volume come in here, and I don't remember what this was. I don't know if it was the Fed or some country buying gold. But I can guarantee that traders saw this volume coming in and they followed. And this is kind of an obvious place to put their stops. And they got flushed out, which happens
Yeah.
a lot. But
Yes. I
but
was just about to
immediately,
comment on that.
yeah, it happens all the time. And you see the volume of people getting flushed out as this fades back down. And maybe there was some kind of little capitulation event there. But anyway, you undercut the lows, and then you have this inside month. And then what do you have? You have a outside green reversal candle, a single bar reversal, a single candle reversal that takes out this high and this low.
It's a rev strat. That's a 1 bar rev strat.
1 bar rev strat. Yes,
Mm-hmm.
exactly. Thank you. And to me, that was a good indication you're going to test these highs again. Maybe you're not going to break it, and they didn't break. Then what you do is you make a higher low. Now, to me, that's the first indication that you're going to be making new highs. And the reason is you didn't come back down like a ping pong ball and test these lows again. There was too many buyers that wouldn't let you get that lower low, or that I don't know, maybe it was an equal low. So you form the higher low, and then what you do is you start chewing through this supply, this resistance zone. And there's sellers up there, and they're selling every time, but this time they didn't. It's almost like teeth. I picture it like teeth chewing through that resistance zone, and they couldn't knock price back down here like every other time. These last 3 times they knocked price down, they couldn't do it. The body of the candle stayed in that resistance zone. And then what happened is you have a rev strat, a bullish rev strat, and you can imagine where shortstops would go. And it goes boom, boom, boom. See you later. Thanks for playing.
Hammer and force. Hammer and force. 2-2 reversal up. Goodbye.
Goodbye. And now we're almost at, or we are at, kind of the measured move for this move. So to me, there might be a little bit more. I don't know. Maybe the Fed cutting rates gooses gold a little bit more. But to me, this trade is pretty much over. So I had names like Newmont and I Am Gold, and I'm out of those. I have a little bit of Anglo Ashanti left. But you could play this with miners like I did, or ETFs, or whatever floats your boat. But to me, this trade is mostly over now, and so I'm looking at things like trend and strat candles. I'm looking to see where the volume's coming in, and where these stops got run, and then you see the volume come back in on that rev strat, that bullish rev strat. And so what I'm really getting from the monthly is is kind of what I call situational awareness. It's a big picture view of what's going on, and if you take the time, you can read it like a map of where the buyers are getting rejected, where the sellers got stuffed, and there was a single candle reversal. And where the breakout happened and all that stuff. You can read it like a map, almost like a book. So so that's what I'm trying to get out of the monthly chart.
That's awesome. Yeah, I agree. And that's what we do that's what we do every Saturday. We go through the month. We start with the month. What are we doing? Are there actually buyers in here? Well, there's the good news on it. Now, are there buyers in here? Well, no, there's no buyers in here. Like, why are we why are we looking at this? Or for example, you have a reversal down on the week, but okay, but what's it doing on the month? Let's see if those buyers come back in here. But like for example, Coca-Cola, we were looking at KO because it's a cheaper stock and it's easier for people with smaller accounts to trade. I'm like, buy some shares. Like, you can't buy the options, but look at this, buy some shares. It's got a good dividend. There's no reason why, this is going to reverse back up. Just looking at the monthly trend. This is good. I like this situational awareness. Very good. Nice army term you got there.
Yeah, I kind of stole that.
I
All
won't
right,
tell nobody.
we keep moving on. So the weekly view gives a little bit more detail than the monthly. Uh, Still got our higher low here. You can see chewing through the resistance zone, and on a monthly frame, that time frame, that rev strat is going to look like a weekly triangle, some kind of triangle, right?
Hmm.
Um, and so I'm trying to, from when I go from higher time frame to lower time frame, I'm trying to sort of interpret some of the patterns I see in a higher time frame into a lower time frame. I hope that makes sense. But usually, a monthly rev strat will show up as a triangle on a weekly chart,
Yes. Hmm. That
and then
makes
I'm
sense.
looking for that breakout. However you want to draw this, as a bull flag or as a triangle or pennant, whatever you want to call it, doesn't really matter. And I want to see that breakout coming, um, hopefully with a little bit of volume. And there's just a little bit of volume down
So
there.
what we say on the show is, or that's what we say. You know this, but in the strap. But I'm looking for what's happening on the month. Are there buyers on the month? And then I'm looking for that weekly chart to reconfirm what we're seeing on the month. You might have
Yes,
to wait, but once those buyers come back in on that week, now I know they're buying on the month, and now they're buying on the week.
yes, that time frame continuity.
Yes.
That's what I'm looking for too. I sometimes I get the terms a little mixed up, so just step in and straighten me out when I need it.
No, I love it because it's great. Of course I will, but no, I love it. It's because, like I said at the beginning of this whole thing, like people will just watch the show and watch the show and watch the show, and then John will come on and be like, yeah, and then you'll say it, the way you say it, and they go, oh yeah, that makes sense. Like, yeah, but I told you that 3 months ago. But John, the way John said it made sense. Like, so this is good. This is good. That's why you're here.
Yeah, thanks. So I also, on the weekly, I run my scans, and they could be inside week scan, outside week scan, rev strat scans. I have all kinds of scans. Um, but typically this is where I'm running my scans and populating lists and setting alerts. So it's a really useful time frame for me. But I'm not I'm not usually trading off of the weekly. I'm trading off of even lower time frames.
Okay. Okay.
All right, next slide. So
A lot of
this is
waves
gonna
here. What am I looking at? Lots of waves.
this is going to look a little different. So I'll just walk you through it. So this is basically Bollinger Bands, but it's based off an EMA instead of a simple moving average. But basically Bollinger Bands, standard deviation bands, and the the end band, sort of the brightest red or pale red, is 2.5 standard deviations away from this happens to be a 21 EMA. It doesn't really matter. You could show the exact same thing with Bollinger Bands and a 20 SMA. Um, but what I wanted to highlight here, that we've got our gold chart with a higher low. I've got some moving averages here. I don't uh, pay pay strict attention to them, but I just have them on here because I know a lot of other traders look at them. So I feel like I have to look at them too, even though I'm not really trading off of them. But it gives you a sense of is the general trend up, or is it sideways, or whatever. If you couldn't get it from the monthly view or the weekly, it's just kind of another layer that's pointing me up.
Mhm.
But here's our triangle from the weekly, right? And I've seen this many times, so I just wanted to point it out, is that here we are, we're chewing through that resistance zone, and the bands are getting tighter. And you don't even really need the bands. You just need to know that somewhere in there, there's a triangle or pennant, and it's getting closer to the apex of that triangle. A lot of times you'll see this last flush here, and it's really just the last flush of sellers trying to push prices down, and buyers come right back and drive it back up. So this was the higher low. That was the first indication to me that we could be moving into higher prices. And then we're chewing through resistance. And then this is the third sign that as soon as those buyers come back on, we're going to the other side of the resistance. And then you can also use these bands to kind of measure the strength of the move. So in this case, we pushed out 3 times beyond the 2.5 standard deviation, and that's a strong move. And after a strong move like that, you're going to get some kind of consolidation. And then it does it again, 3 times outside the 2.5 standard deviation, and then some kind of consolidation. And now it's starting to weaken. We only got outside twice. There's a longer consolidation here. That's partly because it was weakening. And on this move, we got outside once, and then there's more consolidation back to this is a 50-day EMA. Notice we didn't come back that far. We stayed up in the cloud in the
Yeah.
first couple pushes.
Hmm.
And then on this move, we haven't got outside at all. And to me, that means the move is weakening as we're getting next to this measured move target. And I can see these red volume bars picking up. You know, they're taller than the green ones. And
So in that type of situation, are you pushing your stops up? I mean, you might be getting into that soon, but are you pushing your stops up? Or are you holding it all the way through and going, I'm waiting for the reversal for this thing to actually start going to the lows before I get out? Like what are you looking
so
at?
so typically what I'm doing is scaling out of positions.
Okay.
So like I told you, I sold Newmont, I sold IAG, I've got a little bit of Anglo Ashanti gold, um, but I've closed probably 2/3 of my position, maybe more like 3/4. And I just don't think there's much left. But I also don't like to call tops. Anything could happen, and
Yeah.
it could surprise me a little bit here. I'm not I'm not excited for my chances. That's why I've booked most of it. Um, but it's possible that we could grind higher a little bit more, and so I haven't completely shut everything out.
So you're getting in with a bigger position and scaling out. Okay. Hmm.
Typically, I start small and add to it,
Oh, okay.
um,
And then scale out. Okay, so we got a
and
like
then
accordion
scale
effect
out.
going on.
Yeah, I go. I'm maybe I'll add back on dips as long as as long as I see more potential, I'll look to add to positions. But up here, I'm not going to add anything um, for the reasons that I laid out. It just
Yeah.
looks like we're closer to the end than the beginning. You know, like back here and this stuff and this stuff and this stuff and this stuff. I was really excited
Uh-huh.
about the trade, and now I'm not.
Okay. Got it. I don't know why that's funny to me, but it is. It's just like, yeah, this is awesome. And then you're like, man, that's boring. I made my
I
I made my
just
money.
Yeah, I just think there's not much left for me, and maybe I'll be wrong about that, but that's as a trader, I
Mm.
feel like you have to place your bets somewhere, and uh, I feel like in certain places on the chart I have higher odds of success, and that's where I'm most comfortable buying and adding to positions and scaling up and yeah, and then there's other times where I feel like maybe gold isn't the place to be. Maybe maybe I should take a break, or maybe I should study, or maybe I should be thinking about Halloween and stocks. There's other things I think I could be doing other than buying more gold stuff.
That's awesome. Yeah, yeah, it makes sense. And then you have those outliers like Eli Lilly. Well, Nvidia's having a hard time right now, but Nvidia was one of them. Anything in I started calling semiconductor ETF. It's SMH, but I started calling it shaking my head because you just look at this thing like this is why is this is an exhaustion risk for months. Like when's this thing going to go down? It's finally starting to they're finally starting to take some profits off of that, and
Yes.
there's some news on Nvidia, but yeah, dealing with how do you deal with a stock like let's just pick Eli Lilly, one that has been an exhaustion risk forever. Like, you know what I mean? Like, well, I'm not buying it at this price. Well, you should have bought it at that price because it was at $400. Now it's at 900. Like, why didn't you? You know what I mean? How do you deal with that?
Yeah, I try to separate myself from like FOMO and other kind of feelings like that, and just look at the chart and try to remove the bias as best you can. I know it's hard to do. It's hard to do that,
Mhm.
but I try to be analytical. I used to be a scientist in a former life.
Oh,
I used to work at big pharma, and I try to just look at the data and interpret the data in kind of an agnostic fashion, and what is the chart telling me.
that's
Uh,
cool.
so
Yeah,
so
yeah.
I have traded Lilly quite a bit, and Novo and VKTX, all the weight loss names, a little bit of Amgen. I've traded semis a lot. I really like trading semis. Pretty much all of them, but especially Nvidia, Broadcom. So yeah, I'm very familiar with those names.
Yeah, and that, like I said, but that's why I was calling it shaking my head because you're just like, this doesn't, compare to what we're supposed to be looking for. This doesn't make sense. It's just going to the highs, but not if you go through the ETF, the SMH ETF. Not all of them are doing it. We went through one show. We went through. It was they had you had Nvidia, AMD, QCOM, MU, a couple other, but the rest of them. The rest of the semiconductors, they were all red. You know what I mean? So
Yeah,
it's
I know.
still got to be
Yeah,
selective.
there's a few good ones. And the semiconductors, especially the older semiconductors, um, you know, they're moving out of sync with some of the AI semi names.
Yeah.
There's a few exceptions. I know Texan has been doing pretty well. Um, there's a small, I think it's a testing company called I forget the name, but the ticker is AEHR, and that's just been in a world of hurt for a long time, even though it's in a pretty hot sector. And so,
Mhm.
yeah, you definitely see this bifurcation in within different sectors, um, and a lot of it has to do with just where the money's flowing and what's hot, and some other things just get left for dead for a long time, and sometimes they come back, sometimes they don't.
Yeah, like Intel's the next one. They're the next one on the chopping block. Uh,
Oh man, yeah, Intel's brutal. If you look at
it's
that on a monthly chart, it's just
yeah,
brutal.
it's bad. They need to stop making. They need to stop making semiconductors. They need to start making like Intel air, like Yamaha. They need to start making air fryers and TVs. Or like
They
curling
got to
iron.
do something different.
They
Yeah,
got to do something else. You make something else.
I don't
Blenders,
know.
whatever, toasters. Intel toaster. It talks. That's cool.
All right, I'm gonna go on.
All right. John
All
said,
right.
let me keep going. Okay.
Well, what Intel's going to do next is above my pay grade. I can't really add anything to
Yeah.
that.
Yep.
Uh, I know they're trying to build a foundry, and that's going to be expensive, and then they're going to be competing against their own customers, and I don't know how that's going to work. So, yeah, I don't have
Compete
anything
against your
there.
own customers. I love it.
All right, so looking at
4 hour.
4 hour chart,
I've been getting a
and
lot of now. Right before you start, I get a lot of people talking about the 4 hour, and I actually do get people. So people do look at it. So I know there's gonna be a lot of people interested in this. I personally don't really look at it because I want to see what's happening on the 60s right now because you only get 2 4 hour bars in a day. So yeah, I want to see how you deal with the 4 hour bars.
so first thing I do is I look at it on extended hours. So this kind of gray and white shading, this is uh, regular trading hours and extended hours all on one chart. So you get more than 2 bars per day. And for a stock like Nvidia that trades almost 24 hours, uh, you're going to get 6 bars in a day. So so for stocks that or indexes that have a lot of volume and a lot of extended hours activity, the stocks work a lot better than a thinly traded name that doesn't trade a lot after hours, like Build a Bear. It just
Yeah.
doesn't trade a lot. People aren't interested in Build a Bear that much.
Hmm.
Not to pick on them, they're a fine company, I'm sure, but
I
I
love
just
it.
have
That's awesome. Yeah, someone's always bringing up a stock like, "Hey, what do you think of this? What do these guys do? They make coffee cups." Okay, let's see what we got.
to. So in general, good stuff tends to happen in uptrends or when full time frame continuity is in force. Good stuff tends to happen. There tends to be a good reaction to news. The news is interpreted positively by the market. Whatever it is, good stuff tends to happen in uptrends. And then conversely, bad stuff tends to happen in downtrends. So I'll just walk through this 4 hour chart of NVIDIA and tell you what I see basically. So there's this period of, I would call, basing before the earnings, and you're making a support zone here and another support zone there before the earnings come out. And then there's a catalyst with the earnings. You see the volume come in, and the market loves it. They're selling more AI chips, and going great, right? So, and then we get this kind of takeoff, and then comes back into these EMA clouds here that I have on the chart, makes another run, comes back into the clouds, makes another run.
People
And
taking
so
profits. Yeah.
you see this, even a company like Lilly will do stuff like this too. It just keeps going. As long as this 4 hour is still green, I'm still looking to be a player in here. And maybe I'm not looking to buy up here. Maybe I'm looking to buy on one of these retracements or just as it comes out of the retracement. Um, and generally my first target will be the old high or slight higher highs just above it. So it'll be in Strat terms, some sort of broadening formation with a slight higher high. And then what I'll usually do is raise my stop to break even or a penny above break even.